By our panellists from AHDB, Peter Hardwick, Head of Exports, Rob Clayton, AHDB's Strategy Director for Potatoes, and David Swales, Head of AHDB Strategic Insight. In this 15-minute session, we intend to explore the global opportunities and challenges of Brexit. The EU is our most important trading partner, with 2/3 of the value of UK agriculture exports destined there. Equally, 70% of our imports come from the EU. While our future trading relationship with Europe remains unclear, what can be done to ensure the UK's food and farming industries thrive in a post-Brexit world? Peter, I'll turn to you. How's the future looking?
Well, I think in some respects it's looking very bright. Certainly in terms of developing those non-EU markets. We've seen fantastic growth in most of our sectors. It's something that AHDB is working very hard on, along with government, both in investing in markets by having a presence in China, for example, as well as working with officials in other countries to open markets. And we've seen very good non-EU growth in exports. So, for example, in our lamb sector, we've seen an 80% growth in exports to non-EU markets. In beef, it's about 40%. And even in pork, where we had a fantastic year in 2016, we've seen exports grow to £165 million to non-EU markets, representing now almost 40% of all of our exports, and 10% growth last year. So very, very encouraging from that point of view. And of course, the leading light really in terms of exports to non-EU markets is the sea potato sector, and Rob will perhaps comment on that in future, but in a moment. But the reality is most of our exports are going to non-EU markets. So that's encouraging. But we do need to be realistic, and that is that we are heavily dependent on EU markets, at least for the time being, and probably for the foreseeable future. So we do need to ensure that we secure exports continuing to those markets as well as to non-EU markets, and that's certainly going to be a challenge.
So let's pick up there then, Rob. Let's pick up on this. What's going on to develop markets outside the EU and within the EU, I suppose?
So the potato sector's done a great job of hedging in terms of developing markets around the globe. And what sits behind it is the fact that when you try and multiply up potato seed in a warm climate, they'll go off quite quickly in terms of disease and pest pressure. And in Britain, we've got a ready-made solution because we've worked really hard to develop a USP around a very high plant health
a unique
status.
selling point.
Yeah, absolutely.
Yeah.
So I think globally we're very high up in the ranking in terms of freedom from a lot of pests and disease. We operate something called a safe haven scheme, which is our version of a clean flow hygiene system through the multiplication cycle. What that means is we can get seed in a much better condition out to these developing markets. Opening them up is the challenge, and we've had some experiences in the last 2 years in Kenya, for example. And what we've had to do is work with Scottish Government and with the trade to get British raised varieties out there, get the trade from Kenya in to see what's going on and realise the benefit of that switch to a British product. Interestingly, this year, our varieties are yielding 4 times better than the Kenyan own seed. So for us, that shows us the potential. Pretty much in any country that's tropical or equatorial, we can push those markets quite hard.
So, David, what do you see as the biggest opportunities going forward?
Well, John, I think the opportunities do vary a lot by sector, but as Rob touched on, developing markets are very important here. So perhaps the biggest market potential out there is the Asia Pacific region, where we're seeing phenomenal growth in middle class consumers. So at the minute there's around about 500 million middle class consumers in that part of the world, but if we roll it forward 20 years, we're expecting there to be over 3 billion of those consumers. So there's fantastic opportunities, particularly for our livestock sectors, to supply those parts of the world if we can get the right trade access to those markets. But I think for other sectors, I know we're talking about exports today, but for other sectors I think it's about import substitution. So Brexit could well change our trading relationship with the EU, and that might mean some imports coming into the UK could become a bit more expensive, that may provide opportunities, particularly for our dairy sector, for the pig sector, and also for potatoes, where we do import quite a bit of that product into the country at the moment.
So import displacement is obviously something that we mustn't lose sight of. In terms of opportunities in other countries for meat and so on, where are the big growth opportunities?
Well, David's actually identified some of them, and that is the Far East, definitely. There's no question we've seen growth in China. We are well down the road to negotiating market access to China for beef, and we hope we'll get further in the forthcoming months when we're going to have some inspection visits. We're working with the United States, other Far East markets. That's where we're seeing the growth, where there's, first of all, a large population and, of course, growing incomes. Those are very important to us. But I do have to come back to what our USPs are in the meat sector, and they are fresh product delivered just in time to near markets. If you start shipping meat across the world, you have technological challenges. They're not unsurmountable, but you have to address them, and you have to look at how you balance the market. And yes, import substitution is a part of that. But we export things, in many cases, that we don't consume in the UK. So the contribution of exports to returns in the UK is more to do with finding the best market for a product rather than it substituting for an import in some place or another. But I think those Far East markets are important. The US market has seen tremendous growth as well, particularly for the pork sector, and actually it's a highest value market. So if you look at the value of what we sell to China, it's about £1 a kilo in value. To the US, it's about £3 a kilo. So, you could ship a third of the amount and get the same sterling value.
Yeah. Rob, you spoke about Kenya as being a great opportunity. How long is flash to bang? So how long does it take to move these markets along?
It's a long game. So the starting point is to work with the regulators, and there's quite a big negotiation to do around standards, ultimately to sign a protocol that allows the exchange to take place. The second part of that is to make sure the appetite's there from the trade. So we've got to work simultaneously with the potential customers. So it is a very long game. And China's perhaps the best example in this, because in the Communist Party 3 years ago, they decreed that potatoes should become the fourth staple in China. And that was based on some sustainability equation compared with rice. And they see potatoes very much as a solution to feeding a burgeoning population. And that's a situation where we have still to sign, we're getting closer and closer, but we're still to sign that protocol. But that's not to say we can't put the foundations down. We've already got some of our research groups, James Hutton Institute in particular, are already out there looking at how they are going to service and work with the Chinese industry. So it's not just the crop we can export, it's some of the expertise, the advisory services and the breeding technologies.
And there have been some positive announcements recently in terms of developing markets. So the Prime Minister recently was in China and so on, and a number of trade deals were signed. It's sort of universally, is there a great opportunity for Britain in a post-Brexit world, or is this Brexit decision actually going to come back and bite us?
There's no doubt there's a great opportunity out there, and I think we ought to be positive about that. Rob's absolutely right. The timeframes are the key issue here. Very broadly speaking, in the meat sector, it takes anything between 4 and 5 years to secure access from the start of a process. It can take a little longer. You'd be very lucky if it took a little less into that market, for example, because it's a process. And we need to understand that within the timeframe we're talking about here, and that is that we enter a transitional period from March 2019 and we leave the European Union in December 2020, those sorts of processes are unlikely to be complete within that period of time. So yes, the opportunities are, I have absolutely no doubt about that, but it's a question really of understanding the complexity of this and the length of time it takes, rather than the value of the opportunity itself, which is undoubtedly there.
And David, from your point of view, how is this translating? I mean, are you seeing from the work that you're doing that Britain is forging ahead?
I think from the work we've done, we've tried to look at where some of those opportunities are around the world. And Peter's touched a lot on China. Rob spoke about China. I think probably everyone talks about China. The thing which has struck me from the work which we've done, we went and looked at around the world which markets are growing in terms of demand, and where are those parts of the world where potentially their domestic agricultural supply won't keep up with that demand, and there's potentially opportunities for exports. And what struck me, particularly for the work we did on global opportunities for our red meat sector, which was one of our Horizon reports, you saw lots of countries. So I think we identified around 30 or 40 countries around the world where there were potential opportunities. Some of that opportunity is for commodity type product, which Peter talked about earlier, but there's also opportunities for us to supply premium product directly into stores as well, so branded product into some of those markets. So there's opportunities for a whole range of different companies to supply different countries around the world, so we don't have to put all of our eggs into the Chinese basket.
So if I'm a farmer in Lincolnshire or somewhere, I'm going to be thinking, well, what's my contribution to this? There isn't anything I can do, or is there something that I can be doing in terms of looking at the crops that I'm growing or how I'm rearing my animals and so on? Does that help sort of grease the wheels for exports?
Well, I think probably the starting point to understand some of the effects of Brexit on an individual farm business is to understand what the UK's trade position is for whatever it is that you're producing. So if that farmer's a cereals farmer, in most recent years we've tended to be a net exporter of cereals to the EU. So if the trade flow is from the UK to the EU, potentially there will be a downward price pressure with Brexit. But in the case of other commodities where we're net importers, the opposite will happen. So potentially there will be some upward price pressure dependent on the type of Brexit we get. So I think individual farmers should be thinking about that effect on their business. And then if they're producing a product which they think has got demand in other parts of the world, then by all means, just have a look at the evidence, understand what consumers might want to buy, and potentially there may be opportunities out there.
Now, Peter, also we know that some countries will put trade bans in place and so on. And famously, we know that Russia has done that in recent years. That's had a big impact on dairy. How do we get those decisions reversed, particularly if it's a decision that's based on an outbreak of disease?
It is very challenging, but it is doable. I mean, the real key is to have close working relationships with the countries in question. A good example of this actually is the history of our trade with Japan, for example, and foot and mouth disease. In 2001, when we had the major foot and mouth disease outbreak, it took us a long time to re-establish trade with the Japanese market, well over a year. And actually, what happened in 2007 when we had an incident, because we'd learnt from 2001, we kept very close relationships with the Japanese, went to see them regularly, had regular contact and so on. They were fully informed with what we were doing, and actually it was a much quicker process. It took a matter of a couple of months to sort that out. So it is to do with developing those relationships, maintaining those close relationships. But of course, needless to say, we need, and we will be being watched very closely, to manage our own biosecurity in terms of import controls and so on. So that's extremely important. I mean, the best way to avoid the problem is not to have one in the first place.
Yeah, sure. There's something as well about the relentless and incremental pursuit of driving down costs of production as well. And I say that in the potato industry in particular because Egypt is our biggest customer for seed, but under the current European arrangement, there's an export that they can, there's a possibility that they export their crop back into Europe, okay? And what tends to happen is it gets soaked up before it gets to GB. Now we have to consider how that might work in a separate arrangement with Egypt and the expectation of some of their early crops coming back onto the GB market. So the message for our early potato producers is pursue those costs relentlessly.
So just very, very briefly, because time is against us, but very briefly, if I went to you individually and if I said, are you optimistic about a post-Brexit era? How would you respond to that, David?
How would I respond? I think I'm optimistic, but I think Peter's point about the timescales is the key thing here. So I think if I look maybe 10 years hence, I'm quite optimistic, but I think in the short term, there's probably going to be quite a few challenges we need to get through.
Okay, Rob?
I think we've got some great solutions globally on plant health and also domestically in terms of import substitution. I think we've got a lot within our research programs and strategic farm network that shows how we can change the game.
Peter, final word?
Well, I think trade outside the European Union is additional to trade within the European Union. Let's not assume that we're not going to be successful in getting some sort of comprehensive trade agreement with the European Union. Yes, there'll be some trade friction, but I don't think we should assume that we're going to be facing WTO level tariffs on all our trade. So I think that non-EU business, which is important to us, and let's face it, we were pursuing it before Brexit came onto the horizon, becomes more important, there's no doubt about it, but it's not going to be the only thing in the mix.
Peter, thank you. We'll have to leave it there. Thank you very much, gentlemen. So that brings this first programme about exports to an end. But please do join us again after the break. We'll be back at 1 o'clock for the second part of this broadcast. You can ask panellists questions. You can do that via Twitter. Use the hashtag Brexit360. Ask that question and we'll try and come back with the answer. Many thanks to our panellists and to the crew. My name's John Bates. Thanks for watching. to our second session in Brexit360, a year to go. We're joined on the Brexit sofa by three of AHDB's experts: Peter Hardwick, Head of Exports, Rob Clayton, Strategy Director for the potato sector, and David Swales, Head of AHDB Strategic Insight. But before we pick up with the panellists again, I'd like to show a video from an exporter, Mary Quick. Mary is a farmer based in Devon, farms 546 hectares in a family farming business and cheese making company.
Hi, I'm Mary Quick. I run Quick's Traditional Limited. We've got 600 cows and we make 250 tonnes of cheese that we sell around the world. We export round about a third, 25% to 40%, depending on the way the market's working in any particular year. It's enormously important to us. The key challenges are, what's going to happen with trade. We'll have cheese on the water on the 29th of March. Will it be able to land in Brooklyn on the 30th of March? I guess that will be our key concern. In terms of tariff barriers, are the tariff barriers going to be equal both sides? In other words, if we're going to be dropping tariff barriers, will we have those barriers against us? In other words, will we have product coming in but we won't be able to get into those other countries? I guess, what is it about British? Answering that question, what is it about British that makes us special?
David, I'll go to you first. Mary picks up on the point that there's something around the British brand that sort of makes us special, and you've done some work on recently around sort of brand Britain. So tell us a little bit about that, if you would.
Yeah, thank you, John. Yeah, we've been looking at this quite recently, and this gives me a good opportunity to plug a forthcoming report. So within our Horizon series, we're going to be launching a new report around the 17th of April, which will look really at international consumers and what they buy, what their perceptions of British are and the British brand, and also what's important to them when they do their food shopping. I think some of the things we've learned from that work is that there is a huge variance around the world. So the things which consumers know about, the things they value, the things they look for when they shop, does vary a lot. So for example, in China, we've seen that food safety actually is a really important factor for them. When you go across to the US, for example, it's a very different market and the quality tends to come through. And we looked around about 9 countries around the world, and you do see that variance and a great deal of different views coming through from different types of consumers. So for me, I think the key message here is that we shouldn't have a one-size-fits-all approach to exporting. It's really important that you can understand the consumer you're supplying and try to tailor your message and your product to that consumer. So hopefully our report will help the industry to understand at the initial level what some of those trends and what some of those issues are.
So, Peter, we've got to tailor our products and so on to meet the market need. But of course, none of this is going to work if we haven't got trade agreements in place. So just tell me a little bit more about your views around that.
Well, I think the actual issue of trade agreements is a little different from the free trade concept. In other words, we can have trade agreements which are effectively a veterinary agreement or a plant health agreement with a third country. We don't actually have to have a free trade agreement in place. So that's a type of agreement and it's based on inspections and so on, which we mentioned in the previous session. So trade occurs between the UK and third countries without having free trade agreements because it has these things. I think the other slightly more challenging area is going to be this question of trade friction and how that comes into play, because whatever type of agreement we have with the European Union, it's likely that there will be additional controls to those we have today. So plant health and veterinary controls, customs controls, at borders potentially, and also this thing called rules of origin, which is a little complicated, but basically if we do different deals with non-EU countries to the rest of the European Union, then we cannot export those products which may have been imported under a different tariff by proxy to the European Union without there being some rules about that. Those are called rules of origin. Now those things can be overcome. They can be overcome through technology, through electronic certification and so on and so forth. But a lot of work needs to be done to put those in place. And we've talked already about time, but the impact of trade friction, depending on whose numbers you believe, could be anything between 5 and 8% or possibly higher. So it could add to the cost of trade even without tariffs.
So, Rob, so Peter talks about tariffs and so on. One of the questions that I'm often asked is, so aren't tariffs a very good way of restricting imports? Where are you on that?
So in the potato sector, we are a net importer, and that's largely down to frozen chips coming in from France, Belgium and the Netherlands. When AHDB published its scenarios evaluation last year, some of our processing growers got quite excited because the upward pressure on price was clear in all of the models, and more so in the high tariff model. Okay, so there's a bit of excitement there. When you play that back along the supply chain into the processors, then you get a different set of concerns coming up. So they're looking at importing cooking oils, machinery. They're after a labour force from Eastern Europe. So the conversation changes. What you then do is play that back to the growers, and the penny drops that, perhaps some of my crop protection's coming in from Germany, a lot of my fertilisers are coming in from Scandinavia, a lot of my labour's Eastern European, especially for picking at harvest time. So you do get that penny drop moment, and you have to be careful what you wish for. The clearer strategy is around driving out costs so that we can compete rather than going for tariff.
Peter, you mentioned future trade with the EU. Expand on that a little bit, if you would.
Well, I think that the idea that depending on what the outcome is, we'll hit a brick wall and stop trading with the European Union is fanciful. I think we will continue to trade with the European Union. What certainly might be the case is that we will find it difficult to trade on price to the European Union commodities, so carcass meat as opposed to high value cuts from high value animals, for example. So those sorts of concepts of trying to add value and differentiate on the basis of quality, assurance, using some sort of mark, identifying it as British, selling our values and so on, I think are things that we need to pursue in order to make that differentiation and add that value, because we're not potentially going to be in a situation where we can just compete on price.
Okay, so that sentiment sort of works really quite well, David, with this Horizon document and this research that you've been doing then, because we've been able to identify some of the things that are important to some countries.
Absolutely, and just to come back on Peter's comment, I presume Peter's there talking about if there are tariffs or there's lots of friction in place. Obviously the government is seeking to strike this free trade deal, so in the event that that is achieved, actually, I don't think our trading relationship will change that much at all with the EU. And I think we need to recognise that that's the government's preferred position. And the EU has also said it wants to have a trade deal. The slight concern, I guess, people might have is actually this is in the hands of all the politicians, and does all the politics get in the way of the common sense? So our message really for farmers is, by all means, hope for the best outcome, but it's worthwhile having a bit of a contingency plan in place, just in case we don't get what everyone's seeking to achieve. So you've got something lined up and a bit of a plan in place in terms of how you can ready your business for that eventuality.
But are there risks associated with having trade deals?
I think there could be, and certainly the government has said it wants to go out and strike trade deals with countries around the world. So, that's good if we're exporting, isn't it? And it gives us market access, and Peter thinks brilliant, that's really good news. I guess some farmers might think, actually, if we're striking trade deals with big agricultural exporters, like the US and New Zealand and Australia, that might mean more product, cheap product, comes onto our market. So, we've looked at some of that within our Brexit scenarios work. What would the impact be if we we got rid of all of these tariffs and we just went completely free trade and allowed the cheapest products to come onto our market. So, Joey, we've looked at it, and in some sectors it does provide some downward pressure for prices, but perhaps that isn't as big an issue as drops in support and subsidy and those types of considerations.
Well, I think that's absolutely right. The reality is that the big blocks that we want to do deals with have offensive interests. We simply have to accept that. They have offensive interests, and we need to understand what the dynamic of that is. So if you want to do a trade deal with Brazil, there is no doubt they want access for more beef. The same with the United States, and possibly under their own terms and conditions. So,
and that's where we have to be careful, because within the EU's actually been quite protectionist of its livestock sectors. And there's people within the European Commission who do lots of impact assessment to understand what the potential impact of these trade deals will be on the farming sector. So part of the work we're doing at AHDB now is to build up some of our expertise in this area. So if in the future there is a potential trade deal with Brazil or with the US, we can maybe look at what some of the impacts of that might be and provide that information to the politicians. So at least they're making decisions based on the evidence.
Okay, and Rob, we've been talking about sort of creating new markets and serving those new markets. That all takes a long time, but in the potato sector, you've been doing quite a lot of that recently?
Oh, we have, yeah, absolutely. So we have a very active program globally looking at the potential to export. But one point I come back on is getting to grips with the small print in a mega trade deal. One of the big concerns we have is about incoming threats in terms of pest and disease. And that may not be through a potato, it may be through a raw rootstock in horticulture. But that means we've just got to be really tight on the provision we have around hygiene and regulation of those exotic and currently absent disease and pest pressures.
Just collectively, is there a general view that the British government are recognising the huge value and potential associated with agriculture and horticulture?
I'm seeing good commitment, I have to say. Our engagement is pretty positive in terms of opening new markets and seeing the potential there. I suppose where there's a little bit of tension, if I can call it that, is that there aren't quick wins, and I think sometimes there's an expectation, even from government, that there can be quick wins, and it's not always that straightforward. And those countries in the world who are our competitors, who are successful, maximise their opportunity rather than saying, well, we'll only go to the markets where we know there's an export opportunity tomorrow. Because what happens in international trade is that markets move up and down, and you need to have the scope to pick when the opportunities are there. But certainly we're seeing the input on market access, and I think actually that's pretty positive.
And David, you mentioned the fact that there's a real opportunity around import displacement. Mm-hmm. Is that really an opportunity that we can capitalise on, or is there a cost associated to that?
Well, I guess it's always an opportunity there. So where we are importing lots of product in certain sectors, there's always opportunities for us to supply a British product, but obviously we're competing on price terms. So probably part of the reason that import comes in is it's maybe a lower cost. So basically, there's a challenge here for the industry to become more competitive to deal with that import substitution issue. I think with Brexit, what happens is some of the economics changes. So Rob mentioned frozen potatoes earlier, and lots of frozen potato products, frozen chips, they come from Belgium and the Netherlands because it's cheaper to have maybe one plant producing all of that product and moving it across the whole of the EU. Actually, if there's friction at the border or tariffs at the border, it might make more sense to have a plant based in the UK producing that product. So we're already seeing some things beginning to change, particularly in the dairy sector. Some of the big processors are investing more in their capacity. So I think the big companies are looking at this and thinking about how can we manage some of this Brexit risk.
But there's quite a lot of investment required if we're going to gear up to do some of this stuff, Rob.
Oh, there is. It's not cheap. And I think what our processors will be looking for is that lower cost of production. And I think we've got examples in our spot farm network in Scotland where we're stripping out costs of cultivation, we're stripping out costs on crop protection in the west, and we're saving on water budgets on the eastern side. This is back to the incremental gain point I was talking about earlier. We can put all those together and create a fantastic offer for the processor to make that investment.
Well, I think that's probably quite a good place to leave this discussion this time. It looks as though there is a lot of work that's going on to make British farming and British agriculture fit for the future. So that's it for the second one of our broadcasts around Brexit360, and we'll be back again at 3 o'clock this afternoon for a further discussion when we'll be speaking to our panellists about how UK farmers and industry can be fit for the future. So thank you to our panellists, to our media partner Farmers Guardian, and to the crew who made this programme happen. I'm John Bates. Thanks for watching.